right, welcome to The Explainer. Today, we are diving deep into the crypto market for September 2025. We're going to take all those complicated analyst reports and boil them down into a simple, actionable playbook for the big three: Bitcoin, Ethereum, and Solana. Let's get into it. Okay, so first things first, let's talk about September. Historically, this month is, well, it's kind of brutal for crypto. Just look at Bitcoin's track record. Over the last 11 years, it's been in the red 8 times. We're talking an average return of negative 3.77%. Yeah, it's so predictable that traders even have a name for it. They call it the September curse. And this year, the curse isn't flying solo. Nope, its co-pilot is macroeconomics. You're going to want to circle these 3 dates on your calendar. Early September, we get the U.S. jobs data. Mid-month, it's the CPI inflation numbers. But the big one, the main event, is September 16th and 17th, the Fed's interest rate decision. Right now, the market is betting heavily, like a 90% chance that the Fed finally cuts rates. And if that happens, it could be the one big catalyst that completely flips the script on the September curse. All right, let's kick things off with the king, Bitcoin. And honestly, it's starting September in a pretty precarious spot. It just took a 6.5% hit in August, and now it's kind of hovering around that $108,000 mark. The real problem is that it broke below its key support level at 110K, so it's really looking for some solid ground to stand on. But here's where it gets really interesting. If you look under the hood, you see this massive tug-of-war happening. On one side, you've got the institutional money, the ETF investors, getting a little nervous. They pulled out a whopping $751 million in August. But on the other side, you've got the whales, the biggest players in the game. And what are they doing? The complete opposite. They're quietly scooping up Bitcoin, buying this dip. In fact, the number of whale wallets just hit an all-time high. So institutions are selling, but the smart money is buying. What does that tell you? So, what in the world do you do with that? We've got these completely conflicting signals. How do you possibly trade this? Well, that's exactly what we're here for. Let's break down the actual playbook. Okay, so here's the game plan, laid out nice and simple. The sweet spot to even think about buying is in that $100,000 to $105,000 zone. Why? Because that 100K mark is a huge psychological and technical floor. If we get a bounce, our first target to take some profit is right back at that 110K to 114K level. That old support has now flipped into resistance. And this is absolutely crucial. You set a hard stop loss just below $98,000. If it breaks below 100K, things could get ugly fast and you want to be out. So the core strategy for Bitcoin this month is pretty straightforward. You're just using all this chaos to your advantage. It's the classic buy the dip, sell the rip. You let the scary macro news create a buying opportunity, and then you sell into the rally that follows. Simple as that. All right, let's pivot to Ethereum, because this is a totally different story. You look at the price chart, and yeah, it looks a little weak. It tried to break through that massive $5,000 wall and failed. But, and this is a big but, if you look at the network's fundamentals, what's actually happening on chain, it's never been stronger. It's a tale of two markets. So what's driving this strength? First off, those recent network upgrades, they were a home run. They've slashed transaction fees by a mind-blowing 90%. I mean, think about that. Suddenly, using the Ethereum network is dirt cheap, which opens the doors for so many more users and applications. And what happens when things get cheaper? People use them more. That's exactly what we're seeing. The total value locked, or TVL, which is basically a key measure of how much money is active in the ecosystem, has shot back up to over $162 billion. That is an enormous amount of capital that's locked in and being put to work on Ethereum. And it's not just regular folks either. The big money, the institutions, they are piling in. Get this, in just a single week, Ethereum ETF sucked in 286,000 ETH. That's not a small number. It shows a huge growing appetite from the serious players who are buying into Ethereum's long-term story. So again, we have this disconnect. The price chart looks kinda mad, but the fundamentals are screamingly bullish. So how do you trade that? Well, the playbook for ETH is to focus on that key support zone, right around $4,300 to $4,500. This is an area that's been tested and has held strong before. If you're buying there, the goal is to ride it back up for another test of that big, bad $5,000 resistance level. And your safety net, a stop loss just under $4,000. If it breaks that level, it's a major warning sign that the trend is reversing, and you want out. So with Ethereum, the core idea is simple. You're betting on the fundamentals. You're trusting that all that incredible network growth will eventually be reflected in the price. But you're being smart about it.
using the technical levels to manage your risk and protect your capital.
And that brings us to our final coin, Solana. And let me tell you, Solana is playing a completely different game. It's not waiting around for Bitcoin or the Fed to tell it what to do. No, it's just going. It's in a clear uptrend, showing some serious independent strength. You know, market analysts have put it perfectly. They say that anyone trying to short Solana to bet against it is just getting squeezed over and over again. Every little attempt to push the price down gets immediately swallowed up by a massive wall of buy orders.
And that really sums up the psychology around Solana right now. A dip isn't seen as a danger sign. It's seen as a discount. The market is just aggressively, relentlessly buying every single dip.
And a huge reason for this is fresh institutional money coming in. A brand new Solana staking ETF just launched, and almost overnight, it swelled to over $219 million in assets. That's a ton of new, sticky capital, money that's likely to stay put for the long haul.
So, with a trend this powerful, the question really becomes, how do you ride this momentum? How do you get on this train without getting run over? What's the smart way to play it?
The strategy for Solana is maybe the simplest of all. Don't fight the trend. You just join it. You look for your entry point on dips toward that strong support around the $200 mark, which is the bottom of its current upwards channel. Your first target, the top of that channel, around $230 to $238. And of course, you place a stop loss just below that trend line, because if it breaks, the party might be over.
Okay, so let's boil this all down. Your entire September playbook in 3 sentences. For Bitcoin, it's a defensive offense. You're buying the dip at a huge support level and looking for a rebound. For Ethereum, it's all about the fundamental fortress. You're betting that its network strength will win in the end. And for Solana, it's the pure momentum play. You're simply riding the powerful uptrend.
And so that leaves us with the big question for the month ahead. We know that macro news is going to shake everything up. So what's going to win out? Will it be Ethereum's rock-solid fundamentals, or will it be Solana's pure, unstoppable momentum? That's what we're all going to be watching this September.